Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to the markets. We'll discuss about the markets and the market meltdown that is taking place. And we'll discuss about a very interesting small cap company that has come down around 40% from the top, but is producing strong numbers. So, we'll discuss about that. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should drive with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSC, and that I'm not a portfolio advisor. Whatever discussions with respect to markets or investments you have, kindly take that on note that is laden with market risk, and whatever decisions with respect to investments or markets you take, kindly do consult your financial advisor before doing that. Whatever discussions I have in terms of stocks or the markets is purely based on my experience into the market over the last 11, 12 years. Now, before I talk about this company and the markets, a small request: can you support me on Patreon? Once you do that, help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time on discussions on domestic and global economies. Plus, there's a long-term pick on my from my side that a company that is looking good based on their numbers, based on their fundamentals from a long term point of view, and whatever queries that you're having, I'll be more than happy to answer that. You can get a membership on YouTube or on WhatsApp as well as on Patreon. Now let's discuss about the markets first, and for that I'll take you to the TradingView website. These are all the indices in here in yellow. We'll discuss about the Nifty first. So the Nifty is around 22,500 now. Now for long I have been talking about these levels of 22,500 that might come in. For the last 3 4 weeks I have been talking about it, that if the market comes to around 22,500, it will be extremely attractive. Now why I was saying that is that on current earnings, I've kept saying it, I'll say it again. Let's say if the March quarter earnings are not that great, from 1125 the earnings could go down to 1100 rupees. At 22,500, based on 1100 rupees, we are trading at around 20 times, 20.4, 20.5 current earnings. And at 22,500, based on 1 year forward, I believe that there could be a 11 to 12% growth uh, in the next year, or in the next financial year. Based on that, I'm sorry, the P of the markets would be around 18.2, 18.3 times, which is extremely attractive. So at current levels, the markets are trading at 18.3 times 1 year forward earnings, which is near to the averages that has been there for the market. The market average has been between 17 to 19 times. So around 18 times is bang on middle of those averages for the last 10 20 years that the markets have traded at from a 1 year forward perspective. Now there could be gyration, there could be a situation where there could be escalation on the downside, and we could see the markets go lower, probably to 22,000 levels. That is not out of realms. But if you see the RSI from a 5 year perspective, it's around 37. It's extremely oversold at the moment, going towards extremely oversold on a weekly basis, not even on a daily basis, but on a weekly basis. We are around 37 on the RSI level. And in June of 2022, when we made the bottom from that October 21 highs, the RSI went to as low as around 35 or so. So if you see here, the RSI was around 35. So I believe that we are not far off from a bottom. And I'm saying that for the last 1 or 2 weeks, but there could be a situation that there could be a flash crash of 500, 700 points and then a recovery. And what we require for this market to turn around is some bad news to come in, which takes the market lower on a gap down. Say the market opens, say 500 points lower, 2 3% lower, and then the recovery should take place from there on in. We require a real gap down in the market to make the market go higher. That is the conundrum of this market. So let's see from where that would come in. I feel that over the next 6 weeks, 5, 6 weeks, we could be in this volatile phase, and from April onwards, we might have some news by April from US with the president coming out with some big tariff in one of the industries, and we could see a slam dunk in the market and then a recovery of sorts. So that is what we are looking at. If that happens, then we should bottom out. Having said that, that would mean that our portfolios could go down another 5 to 8% going forward. I still believe that a fair value, even with the markets, I mean, even with the numbers not coming in, is around 22,500, fair low value. And I don't see this market should go down more than this. If the market goes down to 22,000, there should be heavy buying coming into this market. That's what I feel. Let's discuss a bit about the small caps and mid caps. Now, what has happened in the small caps is that this quarter earnings have not been that great. So the PE of the small caps have not gone down, although the market has gone down. So it is around 45,000. The PE is around 27, 28, and the fact is that the index has gone down around 22% on the lower end. Say the low for this cycle when the markets fell. So let me take a 1 year chart in here. So from here, I mean, around 44,000 markets have come back. And let's see if it goes back to 44,000. Currently, the index is trading at around 28 times earnings, which is not cheap but not very expensive. But I feel that another 10% shaved off from the PE would be very attractive, and then the markets should perform. So there is a possibility for mid and small cap index to go down another 10%. That is not ruled out over the next 2 months, 1.5 months. So there is a possibility of the small cap index coming to 41,000. There is a possibility of the mid cap index coming to 45,000. In fact, the mid caps are more expensive than the small caps. The mid caps are currently trading at, uh, if you look at it, the mid caps at the moment are trading at extremely rich valuation. So if I take out the Nifty, that's trading at 33.7 times, which is stretched. Although you can't see it on a 1 year basis, on a 5 year basis, if you see, the average is around 26 times. So I feel that there is a lot of room in the mid caps to fall even further from here if the numbers doesn't support, and we could end up going towards these lows, which are around 45,300 or so, and then recover from there. So if you want to gain big time from mid and small caps, then you have to take the pain with it. Last time around, the down cycle had been of around 18 months. That was from these levels of January of 22 up till August of January of 22 up till March of 23. So let's say about from those point of view, from that point of view, this down cycle will not be the same, because I don't see that we are going to go down 18 months. So if the down cycle began in October, we are not going to see this continue. I don't think that this is going to continue for throughout 2025 and into 26, unless the numbers really disappoint and going forward and numbers dip sharply, which I don't think should happen. uh, so what I feel is that the markets have closed. Nifty is about to close lower for the fifth straight month. So if I take a monthly chart of Nifty, this will be the first time. I'm sorry. This will be the first time since 1996 that the Nifty will be closing lower for the fifth straight month. And if you see here, the 20-month moving average, which is a strong, strong support, is at 22,400, and that's why I'm believing that any dip below 22,500 400 levels should see some amount of buying coming in over the last few years up till, if you see here, from this recovery that took place from the pandemic in 2020, the markets have gone and remained above the 20-month moving average. So this is like the pandemic selling that we saw. That happened in just about a month. In February, we were trading at around 11,000 or 12,000 levels, and in March, we were trading at around 7,500 levels. So there was a flash crash of around 35-40% within 5-6 weeks. And that's why it felt really hard, and it was extremely painful with that kind of a crash. But here we are going down slowly, and it's like killing me softly kind of thing that is happening. And I believe that 22,400 should hold on, 22,550, 600. And we are seeing that the Nifty is not falling that much over the last few days, and mid cap and small caps are falling more because Nifty has already fallen a lot in comparison to the earnings that are coming through. It's not that we are having an earnings reversal. It's just that the growth of earnings is slowing down, and that normally happens after every 3-4 years, and that is what is happening. But the market is getting sold off for the last 5 months. uh, in March, if that happens, that will be the sixth month in a row. That will be interesting. So in 96 we fell 5 months in a row. In 1994 we fell 8 months in a row. So that is how far we are going back. We are going back 29-30 years. So two things that are happening after 29 years is the Champions Trophy in Pakistan, and Indian markets going down 5 months in a row. That is what I'm seeing at the moment. And so I believe there should be a recovery in March, a bottoming out process in March or in April. So there could be a situation, a sixth down month would be there, but that will be extremely surprising because we are going to go down below the 20-month moving average, and then the next support is around 20,000, 19,500 on the long term chart. So this is getting this is getting to the level of panic, although panic is not setting in, because if you're looking at the India VIX, it has gone up to around 17 18 in June of 24. And after that, so if I take a 1 year chart of the India VIX, we saw that the India VIX went in January, it went to around 19. It has calmed down. Now, this is what is troubling me. I believe that the India VIX should go to 2021 levels, and that's where the bottoming out process normally happens. In 2024 August, we went to around 23 levels, and then a slight bottoming out process happened in the mid and small cap. So, we would require a day where panic sets in. We would require a day where the market opens 2-3% lower and the VIX go up around say 30-40%. So from 14 it goes to 20 in a jiffy, and moves to 22 and then comes down. That is what is required by the market. The market is waiting for some bad news to come in. I don't know from which horizon or from which field that bad news would come in, whether political, economical, geopolitical, whatever, or from US. But that would trigger a massive sell-off on opening, or massive sell-off intraday, and a recovery. That has always happened. We saw that during the election day on 3rd of June. If you look at it, 3rd of June 2024, when that happened, and we saw that downside that we saw at that point of time. So there the market fell sharply, if you look at it here, and then the recovery took place big time over the next 6 months. A similar kind of fall is required. A similar kind of fall happened in 2020. A similar fall happened in February of 2022 when that engagement took place, hostile engagement between Ukraine and Russia. So things should go as bad as that, and then we could see a recovery in the market. That's what I want to say. Now, let's come to the stock that I wanted to discuss with you, and that is Ganesha Ecosphere. Uh, that was the talk of the town when the stock was trading at 2200 to 2100, etc. uh, right now the stock is trading at 1390. The market cap is 3500 crores. It is a small cap company, so take that on note. But it is in a very interesting field. It is in the field of recycling of plastic products. So it is a leading PET waste recycling company in India, and it engages in the manufacturing of recycling polyester staple fiber, mainly spun yarn, etc. So basically, they are into recycling of plastic bottles, plastic products. They are into recycling of waste clothing, clothing products, etc. And they have many big brands signed up for them to recycle those kind of products. So that is the biggest USP of the company, largest PET bottle recycling company, and big brands in the bottling soft drink industry as well as textile are their parts. And this field of recycling of products is going to go big. So we are talking of renewable energy, we are talking of alternative energy, EV, etc. Recycling waste and cleaning up of majorly things is also a big thing. I mean, in a country like India. So I think this sector could grow big time over the next 5 to 8 years. And whenever I talk about these kind of companies, I'm talking 4, 5, 8 years, 10 years down the line as to how these companies could perform. Now, why I didn't talk about it earlier, because of the valuations. But now, if you see the valuations, the stock has gone down from around 2400 all the way to lows of around 1350, 1320 levels. And so it has dropped around 45% from the top. So what that has helped doing is to curtail the PE valuations, which has gone out of roof at around 1995 all the way to now it is trading at around 34, 35 times. And on a 5 year basis, the stock has been, on a PE basis, the PE of the stock is around 26, 27, and so it is coming near to the all-time average PE, which is very interesting. So at these levels and on downside, say any downside of 10, 15% from here, one can look at accumulating it. I'm not saying that it's going to go up immediately or going to perform immediately, but if you look at the numbers per se on the quarterly basis. In December quarter, they did around 400 crores of sales versus 285 crores in December 23. So that was a growth of around 35%. In terms of profitability, if you see 40 crores of profit went up to 57 crores. So that's a 40% growth in profitability. And in terms of net profit as well, from 13 crores it has gone up to 30 crores. So numbers are pretty strong. There were talks in the management commentary that there could be 1 or 2 quarters where the numbers could be a little subdued, and that also triggered a kind of sell off, but that would be only an opportunity. And that's why I'm saying one can slowly look at getting into this stock. In terms of shareholding pattern, uh, promoter hold around 36%. FII holding has increased drastically from around 1.5% 2 years back to around 12%. DII holding has also remained stable at around 22%, and public shareholding is around 30%. And in even in that public shareholding, we are seeing somewhere around say 6% with large shareholders. So majorly the public shareholding is around 24% or so. So overall, in terms of shareholding pattern as well, uh, things are looking good. Only concern is that the promoters have, again, in like in many small cap companies here also, they have sold a major chunk from around 42%. They ended up selling around 6, 7%. There has been promoter selling, but FIIs have gotten big time from 1.5%. They bought around 12%. So around 10%, 10 to 11% FII have bought over this period when the promoters have sold around 7%. So net net there has been a gain of FII holding that has increased in an environment where FIIs have sold big time across the board. So yes, March shareholding has not come in Jan to March. There could be some selling from FIIs there, but overall a very strong company, very interesting company to look at. So this was my video on the markets and this company. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.